Welcome back to Accountant's Desk. In previous video, we learned simple final accounts, but today we are moving a step ahead. Final accounts with adjustment, such as closing stock, outstanding expenses, prepaid expenses, bad debts, where to record them, trading account, profit and loss account, balance sheet, or both. In this video, we will solve practical examples step by step. If you understand this properly, final accounts will be easy to solve. So let's get started. From the following balances, prepare trading, profit and loss account and balance sheet as on 31st March 2025. Debit balance and credit balance. Drawings 6,300, cash at bank 13,870, bills receivable 1,860, land and building 42,580, furniture 5,130, discount allowed 3,960, bank charges 100, salaries 6,420, purchases 1,99,080, stock that is opening 60,220, sales return 1,870, carriage 5,170, rent and rates 7,680, general expenses 3,630, plant and machinery 31,640, debtors 82,740, bad debts 1,250, insurance 750, and credit balance capital 1,50,000, discount received 2,980, loans 15,000, purchase return 1,450, sales 2,81,500, reserves for bad debts 4,650, creditors 18,670, and there is adjustment, that is closing stock 70,000, create reserve for bad and doubtful debts at 10% on debtors, insurance prepaid that is 50, rent outstanding 150, interest on loan is due at 6% per annum. So let's start recording. First we will record debit and credit balances, and for adjustment we will record the entries twice. Okay. Let's start with the first transaction. Drawings 6,300. Drawings we will deduct it from capital. So first capital less drawings, that is 6,300. Next, cash at bank 13,870. Asset side, cash at bank, that is 13,870. Next, bills receivable 1,860. Bills receivable 1,860. Land and building 42,580. Land and building 42,008. Land and building 42,580. Furniture 5,130. Furniture 5,130. Discount allowed, it is expenses. The customer has to pay more money, but the business has allowed the discount, so it is expense for the business. Discount allowed is expenses, so it is P&L debit side. The discount allowed much 3,960. Next, bank charges. Bank charges is 100. Bank charges is expenses. So P&L account, bank charges 100. Next, salaries. Salaries 6,420. Salaries is expenses for the business. So profit and loss account debit side. Salaries 6,420. Next, purchases. Purchases 1,99,080 is directly related to the direct expenses. So, trading account, debit side purchases. But before that, we will record opening stock. So, to opening stock. Next, to purchases. How much? 1,99,080. Next, we have stock, that is opening stock. On the trading account, debit side 60,220. Sales written. Sales written is directly related to the operations of the business. So, trading account, credit side. First, we record by sales. Then, less next carriage 5,170. Carriage is also direct expenses. So, trading account, debit side to carriage 5,170. Next, rent and rates 7,680. Rent and rates is indirect expenses. So, profit and loss account. Profit and loss account, debit side. To rent and rates. We have 7,680, but we have to consider rent outstanding. So, we will take it in the inner column. Amount is 7,680. 7,680. Next, general expenses 3,630. General expenses is also indirect expenses. So, profit and loss account to general expenses 3,630. Next, plant and machinery 31,640. Plant and machinery is asset. So, balance sheet asset side. Plant and machinery 31,640. 31,640. Then we have debtors 82,740. Debtors is asset. Because we have sold the goods, now the customer has to pay us the money. They are our debtors. So, asset side, balance sheet asset side 82, debtors 82,740. Debtors 82,740. 82,740. Next, we have bad debts adjustment also. Create reserve for bad debts. So, we will take it in the inner column. 82,740. Debtors. We have taken it in the inner column. Next, we have bad debts. That is 1,270. Bad debts are those debts that we cannot recover. For example, we have sold the goods, and if the customer has to pay us, they are called as debtors. And if the customer is unable to pay, that is, if they went insolvent or some other case, then it becomes bad debts. Now we know bad debts is expenses because we will not get the money. So we will record it in the profit and loss account debit side. That is to bad debts. Okay, two bad debts. How much? 1,250. But we have adjustment. So we will take it in the inner column. That is 1,250. 1,002. That is 1,250. Okay. Next we have insurance 750. Insurance is expenses for the business. So it is indirect expenses. So profit and loss account debit side we have adjustment. So we will take it in the inner column. That is to insurance insurance how much 750. Then we have adjustment, so we'll leave a line. Next we have credit balances, that is capital. Capital is liability. So balance sheet on the credit side 1,50,000 capital. We have taken it here 1,50,000. We'll take it in the inner column 1,50,000. This 6,300. This also will take it in the inner column 6,300. Okay, we have recorded it before only. Here we had drawings, we have recorded it. Now I have taken capital 1,50,000. Next, discount received. Discount received is here it is income because our supplier has given us discount and we have received the discount, means we have paid less. So profit and loss account credit side. So profit and loss account credit side by discount, that is 2,980. Next we have loans, that is 15,000. And there is adjustment for loan, interest on loan. Okay, so first we have loan. Loan is liability. So balance sheet liability side loan 15,000. We'll record it in the inner column 15,000 because we have adjustment. Next, purchase return 1,450. Purchase return we will deduct it from purchases, that is from direct expenses. We have already recorded purchases less purchase return. That is 1,450. And purchases we will take it in the inner column. Next we have sales. Sales is 2,81,500. Sales is direct income. So we will record it in trading account. We have already taken it here by sales. So we'll record it 2,81,500. Next we have reserve for bad debts. Okay, there is another entry, that is reserve for bad debts. Adjustment for bad debts. I'll just move it in the next column. Next, we have reserve for bad debts, that is 4,650. It is reserve for bad debts means the company will keep the reserves if the customer will not pay. So it is profit and loss account. We will deduct it from bad debts. So less reserves for bad debts. Next we have creditors. Creditors is taken in balance sheet. Liability side 18,670. 18,670. Now we have completed this. Let's go to the adjustment. Now adjustment entries we will record it twice. Okay, closing stock 70,000. Closing stock is recorded twice. That is first is trading account credit side by closing stock. And the other entry is balance sheet on the asset side, closing stock. Let's record it. By closing stock, 70,000. And balance sheet, closing stock, 70,000. Next, create reserve for bad and doubtful debts 10%. On debtors, our debtors is 82,740. Multiply by our debtors is 82,740. So 82,740 at 10%. It is 8,274. Our debtors is we will record it twice because it is adjustment entry. We will record it twice. So first is profit and loss account. We will deduct it from bad debts. Okay. And the second entry is we'll deduct it from debtors. Next, we have insurance prepaid 50. We will record it twice. So the first one is profit and loss account, insurance. We will deduct it from insurance. Here it is. Insurance. We will deduct it from insurance. And the other entry is balance sheet. Balance sheet on the asset side, that is prepaid is asset. We have already paid it. So less from less insurance prepaid, that is 50. And the other is prepaid insurance 50. Next we have a rent outstanding 150. This is outstanding rent. We already have rent and rates. We will deduct it from rents. Next, other entry we will record it on balance sheet liability side because we need to pay. Less outstanding rent 150. Outstanding rent 50. And the other entry is outstanding rent. We'll record it here. Outstanding rent 150. Next, interest on loan due at 6% per annum. Interest on loan. We already have loan here. We have to pay the interest on loan. So it is expenses for the business. First, we will add because we need to pay. So we'll add interest on loan outstanding. And the other entry is on the debit side because we need to pay. Loan is 15,000. We need to pay 6%. That is 900. So first we'll record it in the profit and loss account. Interest on loan. That is we have. So interest on loan 900. Next, interest on loan is 900, and here we'll add interest on loan 900. Now we have recorded all the transactions. Now let's close the accounts. Firstly, let's take it in the outer column. 1,99,080 minus 1,450, that is 1,97,630. And here 2,81,500 minus 1,870, that is 2,79,630. So the total is 3,49,630. So credit side is more. 3,49,630. 3,49,630. So the gross profit is 86,610. This is gross profit carried forward. So this is to gross. So this is to gross profit carried forward. We have profit and loss account. Gross profit, we will take it down to 7,680 minus 150, that is 7,830. Now 1,250 minus 4,650 plus 8,274, that is 4,874. $750 minus 50, that is 700. And the total is 89,590. So credit side is more, that is 89,590. 89,590. Same on the debit side, 89,590. 61,176. To net profit. Net profit, we will add it to capital. Add net profit, that is 61,176. So 1,50,000 less drawings, 63,000. Add 61,176, that is net profit. So it is 2,04,876. And loan is 15,000. Add interest, so it is 15,900. Now let's calculate the total. 2,39,596 Here we take it in the outer column, that is debtors 82,740 less 82,000. Debtors 82,740 less 8,274, that is 74,466. And the total is 2,39,596. 2,39,596. And here it is 2,39,596. 2,39,596. So our balance sheet is tallied. So that's it for this video. We will continue with more advanced adjustments. If you like the video, don't forget to like, share, and subscribe to Accountant's Desk for more accounting videos. Thank you for watching.